Hey guys, welcome back to Crypto Skillet. In this video, we're going to be talking about support and resistance. This is one of the most foundational concepts in trading, and if you're a trader or an aspiring trader, it's absolutely critical that you understand how support and resistance levels work, what they are, how to identify these key levels, and of course, how you can use them to become a more profitable trader. So I can't stress enough how incredibly important this topic is. Whether you're brand new to trading or even if you're an experienced trader, this is something that you absolutely must understand if you want to consistently make money trading the markets. It's one of those simple concepts that's often misunderstood or even overlooked when it comes to actually putting it into practice. So this video is really going to help you guys out. This is actually going to be the first in a series of trading education videos that I post for you guys here on this channel. Of course, here at Crypto Skillet, we talk about all things crypto and we focus on ways to capitalize on the opportunities that we have in crypto, and trading can absolutely be one of the very best ways to make money in the crypto space. But trading is not passive. It does require knowledge and skill to do it profitably. And I've been getting a lot of requests for this kind of educational content. Of course, those of you who follow me over on Twitter or in my Telegram group know that I post a ton of trading related information there. I share trade setups and talk about different trades that I take. But a lot of you guys have been asking me to make some straightforward educational content to explain the basics of trading. So ask and you shall receive. Again, I'm going to be doing a whole series of these trading education videos just like this, where I break down the most important trading concepts to help you improve your skills and make the most of these incredible opportunities that we have right now in these crypto markets. Because make no mistake, there has never been a better time to be an active trader in these markets. So make sure you're subscribed to the channel and hit that notification bell so you get notified when I post new videos. And now real quick before we get into it, if you're looking for an exchange to do your crypto trading, it's obviously important to use a reputable exchange with low fees and excellent liquidity depth. So I really like BTCC, and I've got a link for you guys down below where you can sign up and get some amazing bonuses. And I actually did a full tutorial and review of the BTCC platform on my channel, so I'll link that video down below as well. But they're one of the longest serving exchanges in the world. They've been around since 2011 and they've really perfected it. The user interface is amazing and it's just a rock solid trading platform. Plus, they do not require a KYC, and you can use it from almost anywhere in the world with no need for a VPN. So even users in the US, Canada, Europe, and most other parts of the world can freely use it. And that's a really big deal because I know a lot of people have recently lost access to many other exchanges that have clamped down on their regional restrictions. So if you need a solid exchange to do your trading from pretty much anywhere, BTCC is an excellent choice. And that's why I partnered up with them to absolutely hook my viewers up. They're going to give you guys up to $11,000 in bonuses, plus up to 70% off trading fees, which is absolutely insane. All you have to do is sign up using my link down below in the description and start trading and enjoy the free stuff, guys. So with that said, now it's time to get into the juicy stuff and talk about support and resistance. But please remember that none of this is financial advice. I'm not a financial advisor. I'm a trader and an investor sharing my thoughts, experiences, and opinions. So always consult a financial advisor before you make any trading or investment decisions. And now with that said, let's get into it. All right, so support and resistance, what do these words mean? So basically, support and resistance levels are levels at which you would expect price to change direction. So at a support level, you would expect price to bounce upward, and at a resistance level, you would expect price to reject and move downward. Okay, so basically support is kind of a floor for price and resistance is like a ceiling level for price. Now these levels are really important when it comes to both entering trades and exiting trades as well. So the sort of well-worn cliche in trading is that you want to long support and you want to short at resistance. Okay, and that clearly makes sense because when you're longing or entering a long position, you make money as the price goes up. So if you're longing at a support level where you would expect price to bounce and then move up, that is a great place to be entering that position. And same thing for resistance. This is a level where we would expect price to reject and start moving downward. And when you're entering a short position, you make money as the price moves downward. So that's a great logical place to enter a short position. Now, when it comes to exiting positions, knowing when to get out of the trade and take profits, these levels are equally important because let's say that I've entered a long position and price is moving upward. Well, if I can identify where a key resistance level is, that tells me where I might expect price to then stall its upward movement and maybe even reject and start moving downward. So that would make sense for me to set that as my target area to take profits and exit that trade. And just the inverse for a short position, right? If I can identify a key support level, it would make sense for me to exit my short position there and take profits right where I would expect price to bounce. Now, obviously, this is one of the most fundamental concepts in trading, and sometimes it really can just be as simple as that, as you long support and you short resistance. Now, it's important to note that sometimes in practice that's easier said than done because inexperienced traders will often fail to recognize or notice these support and resistance levels. And what happens is that as price is moving up, things look really bullish. And so a less experienced trader might be thinking, yes, let me long into this momentum. It's moving up, everything's going great, without realizing that they might be heading up toward a key resistance level. And so if price does hit that key resistance level, price starts to move down. Now they're underwater on their long position and they end up losing money. Okay, and it's the same thing when price is moving downward. Okay, things start looking more and more bearish. So one might be tempted to enter a short position on these really strong downward moves. But again, if you don't recognize where the key support levels might be, then you could be shorting into support. So if price hits that key support level, then bounces, moves upward, now you're underwater on your short position, you end up losing money. Okay, this is one of the most common mistakes that traders make. Okay, they long into resistance or they short into support, and that's why it's so critical that you understand how to identify these levels and how to use them to your advantage. Now, there's another really important thing to point out about these support and resistance levels, and that is that they can flip. And what I mean is that if you have a level, let's just say that this level was acting as a resistance level, okay? Price had come through and tested it a few times, and then eventually, if price moves beyond it, now this level right here that was once resistance will flip into support. Now we would expect this level to act as a support. So if price was to come back down, we would expect it to hold and bounce upward from that level. Okay, this is a really important concept here. And we're gonna see some real life examples in the charts of all these concepts in just a moment. But this actually ties in with another very important point about these support and resistance levels. And that is that the more times that a support or a resistance level is tested, the less likely it is to hold. Okay, the sort of classic analogy is that you can think about it like a battering ram on a door. Okay, the more times that that battering ram hammers into that door, the weaker that door becomes and the less likely it is to hold, okay, until eventually it breaks through. And that's typically what we see with price at these key levels. Okay, the more times that it tests one of these levels, the less confidence we have as time goes on that that level is going to hold. And you'll see what I mean when we look at these real life examples in the charts. Okay, and so the way that might look if this was a support level, okay, say price had bounced off it a few times and then eventually it breaks through, we get this SR flip, meaning support to resistance flip. Okay, now if price comes back here to this level, we could expect it to reject and now act as a resistance level. Okay, so when it comes to actually using these levels in your trading, of course, I mentioned that you generally want to be longing support and you want to be shorting resistance. But recognizing those flips, those SR flips, is also really important because that can give you a really optimal entry right there on the flip. And what you'll see happen oftentimes, although not always, is that when the level flips from, say, resistance to support, price will come back and retest that level before eventually moving upward. Okay, and just the opposite if this was acting as support, right? Then it flips, okay? It would often come back and retest before eventually rejecting, nuking really hard. Those can give you really fantastic entries right there on those retests of these SR levels. And even if you're initially wrong on your idea, so like let's say that you entered a long position right around here because you were expecting this level to act as support just like it did before, but instead price ends up breaking through. Well, generally, if you're longing right here at a support level, you would have your stop loss pretty close below this level. So you may take a small loss, but then you say, okay, I was wrong. Now you wait for this retest. And when it retests this level, now you can enter a short position also with a really tight stop loss. And now you can profit from this much larger move down. So you only lost a little bit, but you made a lot. Okay, and that's how you would generally want to set up your stop loss and your take profit levels when it comes to using these support and resistance levels. Okay, if you're longing support, you want to keep that stop loss pretty tight. You want to give it a little bit of room because sometimes it can wick down below the support level without actually closing below it. Okay, but then you can set your take profit level to the resistance level that you see above you. Okay, that gives you a fantastic risk to reward ratio. And of course, it's just the opposite if you're shorting. Okay, you wait until price is reaching right around that expected resistance level. You can set your stop loss right here, just a little bit above so that you're protected from any wicks. And then you can set your take profit at the support level where you would expect price to bounce. And that gives you an optimal R to R or risk to reward ratio. Okay, so now that you understand why these concepts are so important to understand and how you can use these to actually become a more profitable trader, let's actually see these concepts in action on the real charts. Okay, so over here, I've got the weekly chart for Bitcoin. This was back in 2021, and we can see this playing out very clearly up here in this range. Okay, so usually when I'm charting, I like to make my support levels green and my resistance levels red. So right here, you can see this was an area where price was moving down, and then we had this strong reaction upward. Price bounced off of this zone. You see all these wicks in here, and then price moved upward. Okay, now it comes up into this region here, and it bounces off this general area a lot of times, and it can never quite get beyond this level, and then it ends up nuking downward. So this is acting as a resistance zone. And so now as price is moving downward, where might we expect price to then bounce, change direction, and start moving upward? Well, we can look left and see what has happened historically. And the most recent level where price had a strong bounce was right here in this zone that we marked off. So if we were in a short position at this rejection, that would be an area we could expect price to have a reaction once more. Okay, this was clearly an area where buyers stepped in, so we might expect them to do that once again, and sure enough, that's exactly what happens. Price moves down into this support zone, it bounces, it comes back, retests it several times, it can never make it down beyond that, and eventually bounces up once more, ends up coming back into this zone, makes a marginally higher high, but can't quite break through, and eventually just nukes right on back down, comes back down once again into this support zone, just taps into that, okay, bounces back up, and now at this point, we've had multiple tests of this area, especially if you're counting each one of these individual wicks, which would be more apparent on a lower time frame, okay, and as I said, the more times that a level is tested, the less likely it is to hold, and then eventually it finally comes and breaks through. It has one quick reaction, but then ultimately nukes right through that level. Okay, so now what happens? Once it's broken this level, where might we expect price to then react and see a bounce back up to the upside again? Well, once again, we need to look left. Okay, so I'll zoom out just a bit. And now where did we last see a price reaction? Okay, we've already nuked through this level. So we can see right here, we had a zone of consolidation. What I mean by consolidation is that price was chopping around, going up and down. And that's actually a very important point. These levels don't just have to be where price shows a strong reaction to the opposite direction that it was moving before. Okay, sometimes that's the case. Like up here, price was moving up, had a very strong reaction back down. Okay, then when it's moving down, has a very strong reaction back up, and so on. But you can also find these levels where you see consolidation. And after the consolidation, price can continue moving in the same direction. But consolidation basically means if you have a trending price movement, like it's moving up, then it starts chopping around, and then it can still continue moving up. But that area right there where price consolidated is now an important level to keep an eye on. This can act as an SR level in the future. Okay, and you're gonna see that happens right here in this zone. So I'm actually gonna go down to a lower time frame to get a little bit more clarity on the daily time frame. Okay, now this is a little bit clearer to see. Okay, so this zone right here is what we were looking at. Okay, so let me just go ahead and draw a rectangle around this zone right here of consolidation. Okay, and I'll extend this out. And now I'll change back to my weekly time frame. Okay, now I'll extend this out even further, and let's see what happens. Well, as predicted, this is exactly the zone where the price ended up bouncing back up to the upside. So that prior area of consolidation has now become an SR level. It acted as support right here, acted as support a couple more times. It could never quite break through. And even here at this very lowest drop, this ended up acting as the bottom, okay? The price wicked just below that region a couple times, but never could close beyond it. Okay, then if we extend it out even further, you see price eventually ended up breaking up beyond it, coming back, retesting it yet again. And now if we're playing this as a support level and we're longing here, where might we expect price to then stop and start to move downward? Well, again, we look left, and here is our last level of consolidation. Okay, this is where price had paused its downward movement, had some upward movement, and again, it's more apparent on even lower time frames. And actually, in future videos, I'm going to show you guys how to get even more precise and granular with finding these zones. But this will do for now for this basic explanation. Okay, so if we kind of take this zone, we move it over, you can see that this again was an area where price ended up rejecting and coming back down. So if we were in a long from this area, this would be a great place to set our target for taking profits. And I'm actually going to change this color to red because this area is now acting as resistance. Okay, and then as you see, it breaks down, comes back, retests it, comes back down again before eventually breaking through. And actually, you can see another example of an SR flip within this broader move here. So if I draw another rectangle, you can see that this zone right here was acting as a resistance level. Okay, it bounced right here. It ended up bouncing right here a couple of times before eventually breaking through. And then what does that mean? Now this resistance level flips into what could be expected to be support. And that's exactly what happened. So when price ends up coming down here, it bounces off, comes back, retests it, bounces again. We have a lot of wicks into this area, so it's now acting as support before eventually blasting off. That's actually a great example right there. Okay, so you can see it's so important to be able to identify these levels because these are levels where we can expect price to react. And you can see these playing out on all kinds of different time frames. Okay, another thing you might notice up here in this larger move is that from this move, from this support up to this resistance, and just to be consistent, let me go ahead and change this back to green because right here it's acting as support. Okay, it did have an area of consolidation here before continuing its move to the upside. And then when it moved back down, it had an area of consolidation before continuing its downward move. So we could expect this sort of general zone right here to be important, right? Something to pay attention to. And sure enough, on a smaller scale, once we had this bounce from this support zone, when price ended up coming up here, this acted as a resistance. Okay, I'll change it to red. And you can see price wicked into it several times, couldn't make it past, bounced down, came up, wicked into it again, rejected. Okay, came up again, still rejected, before ultimately making its nuke downward. And again, the way we identified that was by looking left and finding these areas where price has reacted previously. Okay, it seems so simple, and once you understand how to identify these levels, it really can be as simple as that. Okay, these are logical areas where you can be looking for and expecting a reaction in price. And that is how experienced traders play these markets. Okay, that's how we can set ourselves up for optimal risk to reward opportunities, which is what it's all about. Okay, remember in trading, it's never about certainties. Nothing's ever guaranteed. Nobody has a crystal ball, so we can't predict exactly what's going to happen, but we can use technical analysis like this to show us areas where price is likely to react in a certain way, giving us a higher probability of success. Okay, now just one other quick example. This is from the weekly chart of Solana from way back in 2020. And this is a beautiful example of a really important SR level. And I didn't even have to use a zone. I actually used just a line for this because it's just so clean. Okay, so clearly this level was acting as a resistance. It kept bouncing off. You see all these wicks where it just can't make it past it. And then finally it ends up going down below it. So now we would expect this support level to flip into resistance. And that's exactly what happens. So you see price comes up, tests it, can't make it past it. Comes up again, wicks into it, can't make it past it. Comes up again, tests it, can't make it past it, still finds that resistance, rejects. And then finally when it comes up here this time, it ends up breaking through. So now we have another SR flip. So what does that mean? Well, now this resistance has become support once again. So price ends up coming down, wicking to test it twice before eventually going up for a meteoric run. So if you were trading this zone and you knew what to look for at this time, this would have been an absolutely monster opportunity to get in. Okay, again, price doesn't always retest the levels once you get that SR flip, but when it does, those are some of the best opportunities in terms of risk to reward because price ends up coming down almost to that exact level, giving you a really tight stop loss opportunity. And that's just yet another example of how this works in real life. You can see it right there on the chart. And again, when you know what to look out for, you can dramatically improve your profitability. And as I said, this is absolutely fundamental to trading. And it's one of those things that once you see it, you can't unsee it. Okay, so get in the habit of trying to identify these levels. No matter where price is, be looking left to try to identify important SR levels. Watch how price has reacted, see if there are areas where price has repeatedly reacted in either direction, and those give you a clue that those are important areas to buyers and sellers. Those are areas where buyers want to step in or sellers want to step in. And so if price revisits those areas, then that's where you could expect a reaction, okay? That's really the basis of this approach. Okay, so guys, those are the basics of support and resistance. That's how to identify support and resistance levels. Hopefully now you understand how it works and how to find these very, very important levels, and of course, how to use them to trade more profitably. Now, just a couple of extra notes here. If you are going to be trading an SR flip, it's important to wait for confirmations, because sometimes what you'll see is that price looks like it's about to break out, but it ends up just being a fake out, then it falls back inside the range. So if you were longing this area without waiting for confirmations, then you could end up underwater losing money. And it's just the opposite, of course, if you were looking for a short breakout. Okay, so a good rule of thumb is to wait for the candles to close above that level, and preferably you want to see 2 candle closes. And even more ideally than that would be to have a retest back to the level, and then you see signs that it's taking off again. Okay, that's going to give you your strongest confirmation. Of course, you don't always get that, but that's the way to play it the most safe that you can. Okay, if you go ahead and long at the very first sign that it's breaking the level, again, it could just end up being a wick, and then the candle ends up closing back inside. So just be aware of that. That does happen sometimes. Okay, now one other thing that you might want to look for when it comes to support and resistance levels are psychological levels, and those are usually big, even, round numbers. Okay, so what I mean is, like on Bitcoin, $50,000 or $60,000 or $70,000. These big even numbers tend to be psychologically important, and I highly expect that the $100,000 level is going to be very, very important. A lot of people are going to be looking to take profits if and when it reaches that level, okay? Because remember that price depends on the activities of market participants. These are human beings trading, and that is really driven by their psychology, okay? So that's not really a technical analysis thing. It's just more of a fundamental fact about trading psychology. Big, even numbers tend to see reactions, even if it's only short-term reactions. So just keep that in mind as an additional tip. Okay, so guys, that's it. I hope you enjoyed this video. I hope you found it helpful. As I mentioned, I am going to be doing more of these trading education videos, so make sure you subscribe to the channel if you haven't already done so, and hit that notification bell so you get notified when I post new videos. Now, once again, if you do want to trade these markets, I've got a link down below in the description to BTCC, where you can get up to $11,000 of bonuses, plus up to 70% off your trading fees. So shout out to BTCC. They're really hooking you guys up. So enjoy the free stuff, guys, and if you got value out of this video, do me a favor and smash that like button for the YouTube algorithm. And also make sure you're following me over on Twitter, or X as it's now called, and join my Telegram group as well. I post a lot of trading related stuff in there. I show my trade setups and talk about different trades that I take. So definitely join me over there. I've got links for those down below in the description as well. So with that said, thanks so much for watching. We'll see you in the next video.